Hey guys, welcome in this new video. I hope that all of you are doing great. So in this video, we will take a look at what happened on the GameStop shares. So basically the short squeeze that happened on this market. Not only this stock, but there are other stocks as well that have been affected, but I'm going to use this one because it is really the main one of this whole story. And I will share with you guys what you can learn from this and illustrate a couple of principles that are really important for you guys to understand. So just before that we dive into it, as always guys, please don't forget to leave a like under the video. It just helps the video to get more views by the algorithm on YouTube, and don't forget as well to subscribe to the channel if it's not already done. So let's begin. So first of all, just to quickly explain you guys the story and also what in itself is a short squeeze. So a lot of people I think might be a bit confused because it's not a term that you will often hear. It's more kind of a precise term to describe this kind of situation. So first of all, I'm going to explain you guys that, then we will look at the story and then what you can learn from all of this. So first of all, let's explain what is a short squeeze. So you guys will see that it's not that complicated, but it's important to understand. So let's say that we have, the price of a stock. So let me just draw something very simple for you guys. So let's say that we have something like this, okay? Now, one thing that you can do with stocks or any other market is to sell the market. Now, when we say sell the market, it doesn't mean that you sell a position that you bought before. It means that the position that you initiate on the market is a sell. So it's a sell order. You short the market. In other words, you want the price to go down, and if it does go down, you make money. So that is one type of operation that you can do on the market. Now, doing this can be quite risky, and the reason why is because your potential loss on this trade is unlimited. And let me explain you guys why that is. So let's say that you sell the share right here, and let's say that the stock is trading at $20, okay? Now if the price goes up after that all the way to $40, well, here you will have a 100% loss. But the problem is that it's not it. If it keeps going up beyond the $40 level, you can get a bigger loss than 100%. You can get a 200%, 300%, 400%, 500% loss, and it can just keep going up and up. So if you sell a stock and it just keeps going up further, than 100%, well, your loss can basically get to a unlimited size, and it can be extremely risky. Whereas if you just buy a stock, right? So let's say that you buy at $20. You buy one stock at $20. What's your maximum risk? Well, it's $20 because the price will not go under zero, right? So when you buy, you can define your risk really easily with the zero level. Now, when you sell, you don't have the same idea here, because if the price keeps going up and it reach 40 and then it reach 60 and so on and so forth, then you just keep losing more and more. So it can be really risky to try to sell a short, and the loss, as I said, is unlimited if it really just keeps going up, and that is not a operation that I would advise anyone to do. It doesn't mean that you cannot make money doing that. It just means that it's harder to do, and that you need to really know what you're doing and to have a strict plan in order to do this. And even there, that is not something that I would try to do personally. But anyway, so that's beside the point, but that's basically what can happen if you try to sell a stock. And so now if we talk about a short squeeze more specifically, what happens is that if you have, let's say a big hedge fund here selling the stock at 20, if it just keeps going up and up and up, and it just gets more and more aggressively, well, as we just said, the loss is unlimited. So the potential of it can just get bigger and bigger. And so the problem is that if it really goes super far, we might see a short squeeze. And so what does that mean? Well, it means that the loss will be so big for, let's say, one hedge fund or a group of it, whatever, right? It's just a hypothetical example. The loss will be so big that they will not have no other option but to cover the short. And so in order to cover the short position, they need to, close their trade. And in order to close a short position, you need to buy back the stock that you sold before. And so that is basically what creates a short squeeze. So as the price goes up, it kind of forces people who were trying to sell the stock to close their sales and to, basically buy back the stocks. And it just creates an insane move to the upside, and it can really lead to something meaningful. And so that's basically what happened with GameStop. Now, if we go back on the chart, we have, well, a perfect example of what is a short squeeze, because that's what we have right here. So basically the story is, well, as I said, right, I will try to simplify this so everyone understand. The story here is that, you know, you had a group of traders on Reddit, which is a forum, so on WALLSTREETBETS, more precisely, which basically saw that you had hedge funds who were trying to sell this stock right here. So they were short. And so basically what they said is that, okay, what if we can beat these hedge funds? What if we all go together on this stock, we all go long, and we just make the price go up? We try to create kind of a, you know, euphoria type of phenomenon around us, and we just try to make the market go up more and more and more, create a short squeeze and force them to liquidate their position. So that was basically the thinking process of these people who were going into these stocks. And it kind of worked. I mean, that's basically what happened. Now, we don't know at this point of time what happened exactly to the hedge fund who were short. Did they close their position at the right time? Did they blow out? We don't know all the details because the story is still quite new and it's still ongoing. So we need to wait and see, you know, how this will all unfold. But that's basically what we got. And so, as I said, all of this is kind of a emotion type of movement. You know, there's no rationality. There are no fundamental reasons. There are not even any technical reason. It's all euphoria. It's all emotions that are driving these markets. And so basically here you had the beginning of the short squeeze, as you guys can see. So price went up to about, you know, $80. Then you had a bit of correction there. Then the next day we opened here. It pushed even further. Then you had another pullback, and then you had this big up move. And today, well, the price, you know, was trading at its high around $500 and at its low around $115, and right now it's back at $240. So this is an extremely volatile market. It's quite insane to look at this right now and just see the price go up and down so much, but that's basically what we're getting right now. And so as I said, you know, as this event started going, it was getting more and more attraction. You even have, you know, celebrities and big names who were tweeting about this. For example, Elon Musk was even tweeting about that. And so that's what I mean, you know, when, you know, it starts as a relatively small event, but as it is starting to work, it is attracting more and more people who are attracted by making a lot of money on the short term. And so more and more people get invested into it, and then it reaches the mainstream media and all of these things, and it kind of feeds on itself. So that's kind of the principle, and that's what people were trying to do with this stock. And as I said, not only this stock, but it's happening with other stocks as well, but this is really the main one. And that's basically what happened. And so the reason why people are so attracted to these kind of things is simply because you can make, well, a lot of money quick. Now, what they don't tell you is that you can also lose a lot of money quickly, but that is something that people try to negate, and people get way too excited and they just look at the potential gains. So, you know, only a couple of days ago, right, the shares were trading around $50, let's just say that. And today we were close to 500. So that's almost, you know, 1000% gain in a couple of days. And so people look at this and they get really excited. They get really invested emotionally into these stocks, and they just want to buy because they think that it will keep going up forever. And so after that, well, what happens if you buy around 500 and then after that you see it back at 100, you know, just about 2 hours after that, right? This is where, you know, the panicking sets in, and this is where people start to freak out, and a lot of people will lose money on this stock. Will some people make money? Of course, right? Some people will be able to make money and to make big money with these kind of moves, but it's so risky, it's so irrational that it is not sustainable for the long term. And so, as you guys know, I've been trading for almost 6 years. I've been very profitable, and I'm still is to this day. And in the last 6 years, I've seen a lot of crazy things happening on the market, and I've never you know, try to get myself involved in these things because I know that it is not a sustainable way to trade and to operate over the long term to be successful. This to me is 100% gambling. This is not trading, okay? So it's really important to, you know, make the difference between these two things. So there is no rational or systematic way to trade a market that looks like this, which you get a short squeeze on. It's purely emotional, it's euphoria, it's it's just crazy. Okay, and so now if we talk about the last thing that I mentioned at the beginning of the video, which is what can you learn from this and what can we try to put our hands on for the future. Well, it's to simply stay away from these things, I would say. I know a lot of people would disagree with me because it's the hot topic and everyone is kind of excited about that, but as you guys know, I don't get excited about things like that personally. I try to stay rational at all time, and I try to look at things from a logical perspective. And so when you get these kind of moves, I mean, it's not, there's nothing to rationalize this. As I said, it's purely emotion, and it is not trading, it is gambling. You can make a lot of money fast, but you can lose a lot of money fast. And of course, that's not the idea. I mean, if you do trading and if you want to be a long-term successful trader or investor, you need to find a systematic way of doing things, which will set you up for success over the long term. And so that is just not the way to go about it. So personally, when I see these kind of things, my first reaction is not to say, oh, let's try to get in and make a lot of money. No, my first reaction is, oh my God, that's crazy. It's way too insane for me. I don't want to get involved in this. So it's a completely different way of looking at it than what most people are doing. But I believe that this is the reason why I'm still here, 6 years after and still making, a lot of money. It's simply that, when you look at things from a different perspective, you kind of understand this point. And I'm not trying to sound smarter than anybody else or whatever. It's just my perspective that I'm sharing with you guys. I don't have the 100% truth neither. It is just my experience over 6 years of trading that I'm trying to share with all of you guys. So that's basically the story. So we saw basically what happened with the stock in itself, what is a short squeeze and what can we learn from it, on and on. That is just absolutely insane what's happening with markets right now. And it's a really historical moment because we have a bunch of retail traders who, in a sense, were kind of able to beat big hedge funds. And that's quite crazy because I don't think we have ever seen that, or very rarely before. One example that comes to my mind is the short squeeze that we had on silver back in the 70s, where we saw silver, get to around the $50 level. So that's one example, of, something that might remember us, something like this. But it's a really rare kind of situation. And now that we are seeing just basic kind of retail traders all coming together in a group and forcing a market to go up, creating a short squeeze against a big hedge funds. I mean, it's crazy, right? And I understand why everyone is talking about this, because it's quite a historical moment that we're seeing right now on market. Is it scary for the future? I would say maybe. Maybe, yeah, because if you have retail traders like that who are able, in a sense, to kind of control a bit markets and who are able to push prices to such extremes like that, I mean, where is the limit in all of this, right? And where is this going to stop? So in a sense, when I see something like this, for me, who has a more long-term global macro picture in mind, it's kind of scary a bit. So, we will need to monitor this carefully and see how it evolves in the future, and if the financial authority at some point get into it as well. But yeah, nonetheless, it's such a crazy environment right now. Markets are wild to begin 2021. And yeah, so that's basically what I wanted to share with you guys in this video. If I have other ideas related to this, and if you guys enjoyed this video, I'm going to do more in the future. And the way to let me know if you guys enjoyed the video is, as I said at the beginning, just leave a like under it. And if there are a lot of likes on this video, I'm definitely going to consider doing more related to this kind of topic in the future. So I hope you guys enjoyed the video. If you did, you can share it around as well. And on that, take care, trade with care, manage your money well, and I will see you in my next video. Bye bye.